Yo, what's good, guys? I do want to do a quick little, just a small little video, just explaining this trade, just because I know that I'm very like I emphasize on the fact that you should continue trend, blah blah blah. How you should, 80% continuation, 20% reversals, right? Stuff like that. But there's nothing wrong with taking a reversal trade as long as you understand that that's what it is and you understand your risk, right? So obviously, right, we're looking at pretty much a bearish structure now, right? But the thing is, from a swing standpoint, this is way too low for me to sell, right? Like obviously from a premium discount perspective, right? We're in a very discounted market. So I'm not really looking to sell this, right? Well, especially from a swing standpoint. From intraday, that's a completely different story, right? But the only reason why I even wanted to take this counter trend trade was just due to this closure. You can call it a spinning top, a hammer, whatever you want to call it, right? And it ended up being a morning star pattern or whatever, right? The stuff's irrelevant. But once I saw that, I know, you know what? We're seeing a decline of volume, a decline of momentum, right? Is there a decline of volume? Yeah, you could say there is to a certain extent. That volume is starting to decline, but that closure was what triggered like basically the idea that I kind of want to take that trade, right? So now how do we figure out how to get that trade, whatever, blah blah. And what you can see is you can see basically consolidation, equal lows, whatever, right there. And then we see one last push down before a reaction to the upside, which to a certain extent you could say broke intraday structure, but I wouldn't consider that a full structure break right there. But anyways, that's not important. But what is important is the fact that we had this. We can now consider this a sponsored candle just because it took out liquidity in the equal lows and it came back and it gave a bullish reaction, right? So the only issue with this trade now is the fact that this candle is way too big, right? Like it's just what, like 15, 20 pips? Yeah, 15 pips, and if you want to add the wick, you could it's almost 20 pips, right? So it's obviously that's a pretty big, you know, area to look into, right, from our standards. So what do? We start zooming in, right? And this is the area of interest, right? We want to find out where our optimal entry would be, right? So now we're looking at this candle. Then we go to 20-minute, right? We want as the least amount of wick as possible. Then we go to the 15-minute. And then now I'm seeing something different now, right? I see, right, you see this last push down here, right? And then we got a reaction. But now we can't consider this the last move to the downside before the upside because this happened, right? This is what assured a intraday quotations higher low, right? And what do I mean by that? Look, let's continue to zoom in. And as you can see, right, we had a push down, we had a reaction, we had one last push down, and then that's when the move happened, right? Like, as you can see, this is now our last sell to buy candle, but it's not a sponsored candle yet from this time frame just because of the amount of wick that there is, right? So now let's continue to zoom in. We want the least amount of drawdown as possible, at least amount of wick as possible. And just to show you guys like reasons why I try to get the least amount of wick as possible, especially when we still have time frames to go through, right? Let's look at what happened. The red line would have been our stop loss, and then it had the real move happen, right? So that doesn't mean the concepts are wrong. That just means you read the information wrong and you aren't following the proper rules, right? This is why even these quote-unquote smart money traders fail, because they literally don't know how to zoom in. They think the smaller time frames is noise. They think there's too much going on, blah, blah, blah. But obviously that's not the case, right? Because we know that order flow understands order flow, right? price knows no time, etc., etc., right? You guys know that stuff. So we continue to zoom in, right? The stop loss hasn't changed, but now our entry has changed, our beginning entry, right? Just because now it's very clear that we have equal lows that were taken out to potentially mitigate something in here. But obviously we can't tell from this time frame, right? So we're going to continue to go down through the time frames. All right, what is this doing? All right, so now it's looking clearer. As you can see, relative equal lows. That was then taken out. Now our stop loss is here, right? But there's still one last time frame we can go through, and I want to be as sure as possible with the trade, right? So now on this minute time frame, now as you can see, our entry is lower. Our stop loss is the same as the 2 minute, but it is lower than the 5 minute, right? So now we want to highlight the 50%, which is your optimal entry. Right? And now we can even see clearly that this last push down that took out liquidity was meant to cover price inefficiency right here. All right, price inefficiency is right there. It filled that and then it reacted, right? But I honestly, I wouldn't have got that. You know, like that's kind of insane to catch that entry, especially because you're at the low and this is still giving no signs of bullishness, right? But notice that after this rejection here, we technically broke structure from intraday, like I said before, right there, right? But now notice where price reacted from. Right? Literally to the T, we could have had one entry at the open, which would have been around that the 3 pip stop loss. Then our 50% entry. Actually, let me do this. All right, let's do that. Now we put this at our 50%. And this would have been rounded out to 1.5 to 2 pip stop. Okay, 2 pip stop. Okay, so this is perfect to the T, right? Now the only hard part about this was actually getting the actual entry, right? Just because this move literally took a couple seconds. It gave you this entry within a couple seconds, right? But you could have set a limit. You could have been watching it, taking the risk right when you see it, right, etc., etc. But as you can see, that rejected perfectly. And now, what are we targeting? Obviously, first target is previous high. And then my second target was actually this sponsored candle here. Now, why am I targeting a sponsored candle? Because from a swing standpoint, we're still in a downtrend, right? A massive downtrend. So there is still a chance that this can hit the sponsored candle and then continue lower, right? That's why you want to protect your position. You want to protect your profits by having one target at the sponsored candle, or you could even have it at the 50% of that, right? Which this hit perfectly, I believe, right? So as you can see, that hit perfectly to the T. So you could have had a snipe here, and then you even could have had a hedge position sell right here, which would have been perfect too, right? And the only reason I didn't take that was honestly just due to the time of day. Like, as you can see, it's 4:30. It's not really my trading time. I don't even want to do anything with it right now, right? But anyways, this was my target. Now from a risk to reward perspective, your first target on position 1 is a 7-to-1, while the second entry, the 50% entry, your first target is a 12-to-1, and it's only 25 pips, right? So that's why I say pip count doesn't matter. All that stuff doesn't matter. What matters is the risk to reward and you actually executing on the trades, right? So your first target is already 7-to-1, 12-to-1, anywhere in that area. And your second target, 57 pips for a 19 to 1. And your second position, 59 pips, well, 57 pips and then 59 pips for basically a 29.5 to 1, right? So now you could have taken your profit there, 30% on the trade. That took what? That took 2.5 hours to get 30% of your account back. And that's ridiculous, right? But that just shows you that there's nothing wrong with taking a specific a counter-trend trade, and there's nothing wrong with taking intraday targets, because as you can see, these intraday targets can be very rewarding, right? Because now this position, you can ride this out, because we did technically get a Morningstar pattern here, right? Morningstar. And this can start flying, and then now you can even look at this from a swing perspective. You could have taken some type of partials, and now the previous high is I can't even see that, 88 to 1 trade, right? It would take a couple of days to get there, but the point is, you know, an 88 to 1 trade that could take a week or two, you know, what else could you want? You just almost doubled your account in a week, 2 weeks, right? And that's the reason why I emphasize this stuff to you guys, to emphasize to zoom in as much as you can, to, you know, try to get the best possible entry, to be perfectionist about it, just because that getting what, two to three of these a week, that's, you know, that's stupid, right? That's almost tripling your account with using what, 1-2% risk. You know, that's the goal. That's what everybody should be aiming for. And yeah, I just wanted to show you guys that really quick. So yeah, guys, I'll see you guys on the call Wednesday, tomorrow. But yeah, see ya.